A warm welcome to all our respected members, honored guests, and participants who are joining us today. Before we begin the session, with the recent geopolitical developments in the region, we sincerely hope that each one of you, along with your families, are safe, calm, and supported. We also extend our heartfelt appreciation to the UAE leadership and authorities for their continued efforts in maintaining stability, security, and a sense of reassurance for all the residents. As a chapter, in these times, we stand with our members and remain committed to fostering stability, knowledge, and togetherness during these uncertain times. Today's webinar is part of that commitment, given that we are not able to host the physical sessions as of yet. Today's session is delving into two very important topics for us as professionals. As the financial priorities evolve for NRIs in the UAE, understanding the cross-border banking, regulatory clarity, and the rapid rise of GIFT City IFSC has become increasingly important. GIFT City has emerged as a globally competitive international finance center, attracting participation from leading global financial institutions. From Abu Dhabi, we have First Abu Dhabi Bank, Abu Dhabi Investment Authority, ADNIC, who are actually part of the GIFT City framework now. And it shows a clear reflection of the growing international confidence in India's IFSC framework. For the diverse NRI and professional community across the Middle East and beyond, I think GIFT City offers access to a wide range of globally aligned capital products and markets and services. There are investor-friendly fiscal regimes, long-term tax exemptions, concessional corporate tax rates, and exemptions from various transaction tax. And this further strengthens GIFT City IFSC appeal and its position as a strategic bridge between India and the UAE. We are privileged to have our speaker, Amit Kumar Kedia, who is joining us with this morning, who will take us through the evolving landscape of GIFT City IFSC and its growing role in shaping India and UAE financial synergies. Following this, we are also privileged to have Ms. Neethu Ramnath, who will guide us through the practical dimensions of balancing local and NRI banking with a focus on safety, returns, and accessibilities. We warmly welcome both of our speakers and thank you for being here with us this morning. And a special thanks to all our attendees who are joining us, investing their Saturday morning in learning and professional growth. I now hand over to Chapter Chairman C.A. Krishnan for his opening remarks. Thank you.
Thank you, Priyanka, for starting set the tone for the meeting. Good morning, everyone. It's my honor and pleasure to welcome you all for the webinar. Hopefully, this will be the last webinar we will be conducting, and I believe from this month onwards, we will be making it to the live session as we always do. And you might be aware that we are keeping our election on 22nd of April. That will be the first physical event, following which I think we will be able to do the physical event from then on. So looking forward to see you all on 22nd of April to elect our members for the year, for the next year. Then today we are talking about two important discussions. Priyanka has already mentioned. One is on the topic Global Finance Connect. One is on the GIFT City. Another is about the NRI banking. GIFT City already Priyanka has explained in detail. It's not only for the members. It's not only for the individual. It is also for the corporates. Our good friend Amit Kedia, whom we met during our OFA session, is going to talk about what are the various synergies, what are the benefits as an individual and as a corporate we can get the benefit from the GIFT City. It has been evolving. Everyone is aware of it. Being a chartered accountant, it is prime importance for us to know more about the opportunities which are available in the GIFT City. The next session is going to taken by Neethu Ramnath. She is the Chief Manager from Bank of Baroda. In fact, just to give an update, last week I was there with Amandeep Singh. Amandeep Singh ji is the Regional Manager for Bank of Baroda. When I was discussing with him, then only I came to know that the NRI FCNR dollar deposit account in India is you are getting a good interest from BOB and other banks. Of course, the other banks also BOB. Then I was thinking whether only I am the only one who is not aware of it, whether you're going to get a 5% interest on a US dollars based deposit. Then when I spoke to a couple of friends, they also say the same thing. They are not aware of it. They are under the impression it might be 3% or 3.5%, the 2 FCNR dollar based denomination. That's why then I told Amarnath ji, why don't we have a session? That's why we have called the speaker from BOB to just talk about what are all the benefits, what are all the various opportunities available for NRIs to invest in India, what are the schemes which are available with the BOB, with vice versa the other banks. Okay, so this is a brief session. This is going to be the 1.5 hour session today. Now I'll hand over the stage to Nirmal to introduce CA Amit Kedia.
Yeah, thanks, Krishnan. It's my great pleasure to introduce CA Amit Kedia for this wonderful session. CA Amit Kedia is a partner at Gopal Sharma and Company and director at Kedia Corporate Advisory Private Limited with nearly 20 year of experience in finance, regulatory compliance, and strategic advisory. He has extensive expertise in real estate and RERA advisory, capital markets, including REIT, alternative investment funds, SMEs IPO, as well as cross-border advisory covering IFSC, GIFT City, which is growing popular uh, these days, FEMA, FDI, and ECB. He is also actively engaged in emerging areas such as digital assets and tokenizations. A frequent speaker at forum organized by ICAI, ICSI, ICMAI, CII, CREDI, and Nardeco. He has also authored several books, research papers, and professional articles. We are delighted to have him with us today. Let's enjoy this session. Please join me in welcoming C. Amit Kumar Kedia. Over to you, Amit ji.
Thank you very much, our chairman, vice chairman in absentio, Priyanka ji, Nirmal ji, Hemlata ji, and everyone for this warm gesture and welcome. Yes, definitely, times have been hard in these last 40 days, 45 days, but hopefully today everything would be full and finally settled. And now, as very well told by Krishan ji, 22nd onwards, we would be having the physical meetings. Friends, we have seen a time which was not even seen, which was not even expected in our dreams also. So, learning from that and how, if in case we need to bridge ourselves, because we have always learned, we have always listened that don't put all your eggs in a single basket. Now this thing have showcased somewhere. Now with Gift City being maturing, it is becoming a financial setu, an opportunity for us as individual, as NRIs, as chartered accountants, as our advisors to the entities we are either into employment or if we are there into advising globally. So, understanding Gift City as a global financial setu between the world and the India, inbound and outbound, becomes very important and very crucial. As told by Priyanka ji, many of the entities have opened from Abu Dhabi, have opened their just have opened their shops at GIFT IFSC. So the regulator, ADGM, have came with a memorandum of understanding with the GIFT IFSC. In line with it, the first Abu Dhabi Bank, Abu Dhabi Investment Authority, Abu Dhabi National Insurance Company, they all have started their operations at GIFT IFSC. So, friends, a time when the top-notch short entities of Abu Dhabi are now present there at IFSCA, it's a time that we should think over. We should do a plan, make a foreseeable thoughts how we as professionals could take this jurisdiction moving forward. Friends, if we see the NRI community, which is distributed across the world, 3.5 million of NRIs are there at UAE as compared to other jurisdiction, which is like the US is the nearest one with 2.5 to 2.1 million, and so forth with Canada, UK, Australia, Singapore. But the diaspora, in terms of presence in UAE, is at the topmost, and how we can take this jurisdiction as a second jurisdiction for us, not coming into this jurisdiction, then also being there. Or we can say not coming to the mainland of India, then also we can be there at the Indian jurisdiction at India. So if we see Ashok, who is a chartered accountant based out of Abu Dhabi, he is thinking, he is having some queries, some problem statements with him, maybe in terms of the jurisdictions where he should diversify his self, where he can identify some of his clients' problem statements, which could be the opportunity for him, for himself, or for his clients, or maybe understanding the gift city as a jurisdiction, that how the gift city could be a jurisdiction where I can see opportunities for myself and for my clients. And this is what we would be discussing in another 35 minutes in detail, how we can give a CA Ashok a solution moving forward. So, friends, to whom we are not aware of the place, the location where Gift City is actually exists, where it is. So it is near to Ahmedabad and Gandhinagar, maybe a triangle between Ahmedabad and Gandhinagar. The top end is towards northern part of the India. If we see in Gujarat lies the Gift City. Again, if we see holistically on the world map, then it is located on the western part between Dubai, Singapore, London, and it's almost covering all the areas. That is, it's almost in the center of the world, where if you go or come in, it would be almost equal and creating a bridge between the world economy, between the global economy. So, if we see how Ashok can have a primarily focus, or if Ashok wants to understand how he can balance his exposure towards the Middle East markets and the markets which is focused towards India, markets which exist in terms of his structuring as a chartered accountant, then how he can work upon these problem statements, or maybe maximizing his tax leakages, understanding of his taxes, how he can work towards it. So, if we talk about specifically for the NRI community, the jurisdiction at IFSCA provides a very seamless KYC norms. We would be understanding the KYCs also. But if we talk about in terms of doing a fixed deposits in FCNR basis, then it may be a possibility that the interest rate is there, but the hit which globally dollar is having, the depreciation which dollar is having, that hit wipes out our returns. So having said, opening an account at Gift City, and with the opening of account, there is no changeover of currency which is required, as there are 15 currencies which are available. So many of the banks have more than 10 to 12 currencies operative. So there are almost 37 banks, national and international and public sector banks, which are available at IFSC to provide these service. So a dollar denominated account with all the facilities of remittance, a fixed deposit which could be made for more than 5 years. Yes, you have absolutely heard correctly. Fixed deposits could be created for more than 5 years with all the facilities of internet banking, with loan being as a facility. If somebody having a account there, if sees that I want to take a loan, then that loan could also be taken at the banks which are there at Gift City. Or maybe someone is planning for their retirement to be retired in India, but they does not want that the money should be there in India till the time they are retired. So they can park their money at Gift IFSCA, where INR is not the currency. So they need to, or they have a liberty, or they can enjoy any of the 15 currencies in which they want to keep their money. Again, it is in the inland of India. It is the land where India exists, but FEMA would not be applicable. There would be no applicabilities of FEMA in terms of remittance. So it is again outside India only. Maybe for the education of their children, or maybe planning or putting up their wealth advisory, they can use these bank accounts there at IFSCA. And if they see that they need to put money for their elderly parents there at India, then till the time they actually get the amount to be remitted, they can park that money at IFSCA. So these are the advantages which GIFT IFSCA is bringing. Now, if we talk about in terms of taxation, then it is absolutely tax free for the income which has been generated. So we take an example that if there is an interest which have been generated at the fixed deposit, then there would be a concern that there would be a TCS which happens, like if the same amount is there in mainland India, but this would not be attracted if the FD, if the amount is there at the IFSC. Because of the internet banking, the remittance, if I want to pull my money again back to any part of the world, it is on the click of a button. And with this internet facility, I can remit across the world for my amount which is there. Apart from it, for the corporates, the taxes are zero for 20 consecutive years out of 25 years. And post that also, the taxes are just 15%. So again, these taxes are in line with the international jurisdictions, which I'm not talking about the tax haven areas. But if we leave the tax haven jurisdictions, then the taxation have now been made very competitive in the Finance Act 2026. Now, with this, the government have also showcased their vision of long term, where they don't want any ambiguity in the taxations which needs to be there moving forward for any of the entities which are coming to India. So that could be an alternative for Ashok, where he is getting the tax incentives. Maybe for the regulatory framework, it is a unified regulator. So, being unified regulator, all the four regulators, the RBI, the SEBI, the insurance, the pension, all these four regulators have now came together from the Act of Parliament. They have been given an authority to run as a regulator. So similarly, as we all know, SEBI is having its head office at Mumbai. In the similar manner, the IFSC is having its head office at GIFT City. GIFT, that is the reason it's like the GIFT City, and IFSCA is the regulator. So if we see, being this unified regulator, there is a pool of opportunities which have been increased, which have been created. Why? With the single regulator only, you are now able to work on the capital market sides also. You are able to work on the banking sides also, insurance sides also, and the pension side also. Recently, on 6th April, the pension regulation have also been notified by the regulator. So, any work in terms of financial services which is to be carried not just for inbound or outbound from India, but taking the jurisdiction across the world can now be done with this regulator IFSC. Now, if we see in terms of the NRIs, the NRIs have always been given an added advantage of their home jurisdiction. That would be understanding in a simplified manner, where we would be understanding how the onboarding of NRI is too simplified in this jurisdiction. So the need base of our chartered accountant Ashok is being taken care by the ecosystem which is present, the unified regulator which is there, the taxation incentives which are there, and a smooth inbound and outbound putting himself onboarding with the regulator. Now, this was an overall understanding what IFSCA is all about, how the advantageous position of IFSCA in terms of the location, in terms of a regulator which is absolutely new, a regulator which is very flexible, is available to any citizen maybe resident, non-resident, or any foreign national. They all can take advantage of this jurisdiction moving forward. Maybe a listed entity, maybe a entity which is into a fintech, or maybe an entity which is there in the startup segment. Now, if we understand very quickly in terms of the onboarding process of an NRI at GIFT City, then this onboarding, when it is required, it would be required for any of these three particular reasons. First reason could be that the NRI look forward for their onboarding on the banking which is available there at IFSC. So opening their bank account, doing their operations at bank could be one of the reasons why any NRI would be coming. Another reason could be they are coming for their investments. That is, they do their investments in the investment horizons which are available, maybe in terms of their alternative investment funds, investing in them, maybe through ETFs, REITs, InvITs, family offices, and lastly, the capital market. So, for onboarding on the capital market, they would be requiring a broker, maybe to onboard to them in the primarily or the secondary market ecosystem which exists at IFSC. Maybe for the investments of the global entities which are listed at IFSC. So these three people would be, one of them would be there for whom any NRI would be coming and onboarding himself for their services to be taken, maybe for a specific area of banking, fund management, or capital market, or all together in all these three. So, if we understand in terms of the KYCs and documentations which are required, these KYCs for the UAE based NRIs with these entities at IFSCA could be one. Another could be the nature of relationship that they are required to be put in place. That is, they need to understand that what are the types of forms which are there for the account opening, for the investment purpose, for any other services, whether he is required to take the documentation for the face-to-face KYC, or he would be required to do a KYC which is there electronic, that is through the video KYC. So first and formally, we need to understand this problem statement, that what type of KYC, what type of entity the NRI is looking forward for. Once it has been identified, first we would be identified the organization or the entity in which they are required to do the KYC. Then further we would be identifying and understanding the way, the methodology they are required to do their KYC. Then we would be understanding what are the types or the documentation, we can say, which is required, or the due diligence which would be done by the entity who are onboarding the NRI. So first and formally would be understanding their personal details by their name, by their passport number, date of birth, nationality, any document which is there at UAE. Then understanding about their address and contact, what is their current overseas residential address, what are their coordinates in terms of their mobile, their email, which is there, are they engaged professionally, maybe self-occupied, the occupation which they are there, from where are the sources of fund, how the wealth and income, these documentation, collection of these KYC information would be required to put in place. So we have identified the entities, we have now identified the type of documentation, which way we need to move forward, and we have identified the documents which are required to be collected. Now, if we see in terms of the validity, in terms of the submissions of these documents, then the documents for the passports, for the overseas address would be there. Some of the documents would be self-attested, and the documents could be seen at the notarized public. They could be, if somebody is outside country, then they can get it done notarized. They can do by the banking verification, or from the Indian Embassy or consulate, or any certified professional, CA lawyer. So some of the jurisdictions allow that, then that needs to be done, and those documents then gets completed. Moving forward, we need to we need to do the identification, verification of these documents. The valid document copies needs to be put in place. In terms of the video KYCs, then the live photographs are required to be put in place. Live images, locations through the coordination, geotagging would be required to be placed, and that would be applicable to specific jurisdiction as of now. But in that jurisdiction, UAE is being covered. So if anyone from UAE, there are 8 countries which have been notified as of now, out of which UAE is one of them. So a video KYC could be done through it. Lastly, we need to identify and understand whether the person who is coming and doing its KYC is doing in its personal capacity, or the person is coming for the entity. So if he is having a beneficiary interest of between 10 to 25%, then it would be considered as a beneficiary owner on behalf of the entity. Else, he would be considered coming in the individual capacity. Once all the activities have been done, then he would be boarded on the central registry system, the central KYC registry, and post validation of his KYC, activation of his account would be carried. So this was overall understanding of the ecosystem of IFSC, understanding what opportunities me as a chartered accountant, along with me as an NRI, is bringing on table, and the opportunities in terms of the KYCs, which have been simplified in a very simple manner, could be brought into, along with the areas where, as a person NRI, I can take advantage of being there in India, but not being in India. So this is how the advantages could be taken. Now moving forward, if we try and understand the ecosystem of the GIFT IFSCA, apart from the NRI prospectus, if we take an understanding of the capital market, as friends we have discussed, there are four regulators who have now been combined together. One, banking, insurance, pension, capital market. And if we see in our lives, all these four are having their importance at various life cycles, various stages of our lives. So, if we look forward for investments, then capital market becomes a very important role. And friends, it's an opportunity, two-way opportunity, or you can say when we talk about a sword, it's similarly the opportunity where it's a two-way sword which is coming with the capital markets. One is we as individual or our clients as individual investing in the global markets, in the Indian markets through gift, or opportunities of getting listed the entities through gift. So raising of capital for the businesses in gift. So if we understand in terms of the ecosystem which exists, so there are two stock exchanges. Again, like we are aware of the Bombay Stock Exchange and the National Stock Exchange, both are the subsidiary of those exchange. Indian International Exchange is the subsidiary of Bombay Stock Exchange, and NSE IFSC is the subsidiary of National Stock Exchange. Apart from this, a parallel capital market ecosystem infrastructure is there with the clearing corporation, with the depositories, with the custodians being there. In addition to the fintech opportunities like the blockchain, AI, digital assets, innovations, tokenizations, they all are also available. Apart from the startup ecosystem, the sandbox, which is available, which is present at GIFT IFSC.
Mr. Amit? Yeah, Amit.
Yes, sir.
Amit, can you go a little bit faster? Because considering
Yeah.
the time, and also there are a lot of questions are also there.
I just get it.
Because there are
quick.
questions,
Yeah.
other members want to know more about the, there are a lot of questions.
I just try to complete in 5 to 6 minutes. Yeah.
Okay, fair enough.
So in terms of the budget, the budget have brought in a very big opportunity for the investments to be brought in place. So 5 to 10% have been changed for the individual investments, and for the aggregated, it has been changed from 10 to 24%. Now, what opportunity is being brought in by this capital market is maybe through the IPOs, the entities which are there directly listed at any part of the world. So any entity which is already listed at Abu Dhabi exchanges can seek a dual listing. With this dual listing, there they can now take advantage of the Indian residents to invest in those entities. Any of the startup which is there at UAE, maybe they have their business in India or they have their promoters of India. They can see these opportunities of getting themselves listed with just putting 10% on stake. That is, they just needed to offload 10% and they can get listed to this exchange to the GIFT jurisdiction. Banking and wealth management, yes, we have more or less tried to cover. Then in terms of the insurance, again, the insurance, there is a cost-effective insurance which is available for NRIs at GIFT IFSC. Maybe in terms of their wealth management, low cost of insurance, to an extent, life insurance, motor insurance, again, in foreign currencies are available, reinsurance are available. Then, as we all know, India is the capital of global capability centers. With IFSCA, the treasury across the world, the entities can manage their treasuries across the world, having at GIFT IFSCA, where they would again be getting the advantage in terms of the taxation, which is 20 years out of the 25 years, any 20 consecutive years, they can manage. If any of these entities wants to take loan within their own entity with from various jurisdictions, then that could be managed. And with the geopolitical uncertainties which we have seen, these entities can take an advantage of bringing themselves to this jurisdiction. With aircraft leasing, shipping leasing, leasing on oil field equipments is another opportunity which is there. So thank you very much for like giving me the valuable time, and now we can open for the questions. Anybody who like to connect on LinkedIn can scan this QR and would be happy. So thank you very much. Now we can take our questions. Yeah, please.
Thank you, sir. Thank you so much for the presentation. There are a couple of questions that are posted in the chat. I think you have answered most of it. I'm just reading out few in case if it gets missed out. I think later we can give these questions to you and we can email the answers to them.
Sure.
Yeah, sure. What laws will be applicable for the disputes, liquidation, etc.?
So for the laws, there is an international arbitrage center which is being proposed to be set up at IFSCA. So once this is set up, then that would be applicable. Till the time that is not set up, whatever laws, whatever jurisdiction have been placed in the agreements, that would be considered, that would be taken into consideration.
Okay. Is IFSC GIFT City deposits cover same deposit guarantee up to 5 lakh Indian rupees only, or higher guarantee to cover credit risks?
So again, GIFT IFSCA is a foreign jurisdiction. So the Indian guarantees, which is there of 5 lakhs, would not be applicable at GIFT IFSC. It's absolutely a foreign jurisdiction.
Okay. There is a detailed question wherein a person says, a member says he wants to open a fund in GIFT City for tax advantages, but he just came to know that he will not be able to do trade derivatives on NSE or BSE, but the trade derivatives only at the IFSC exchange where the liquidity is low. We have to go for SEBI AIF Cat 3, and there is no option like VCC which we can avail in Mauritius. So what is your take on that?
So basically, I can just give a broader answer. I need to understand the question detailed, then a specific answer could have came. In broader terms, if any fund is coming, creating its fund at IFSCA, then there could be three ways in which they can take an advantage of it.
Okay.
First, that fund can do investments in India, earn money, and could the residents, the income could be paid to the investors who invest across the world. Indian investor can also invest in it, but to an extent of the LRS limit, which is applicable. The taxation is again on the fund level. So taxation in hands of the investor would not be there. Another opportunity could be the fund could be created and the investment could be done at any third jurisdiction. So a fund is being created, maybe someone from UAE, the pooling of money is being done and the investment is done in China. Or the third could be someone who creates a fund for utilizing the money in UAE, can pool their capital from across the world and can invest that amount in UAE. So this could be the proposition which the fund can take an advantage. Net, the taxation would be in the home jurisdiction where the investments are done. There would be no taxation at the fund level, and there would be a pass through to the investors. So there would be no taxation in hands of investors in the gift jurisdiction.
Okay. The other question from Mr. Galib is whether more than 5 years FCNR deposits in IFSC are clubbed. One second. Are clubbed with other terms like maturity dollar amount rate are fixed with OTC FX or fixed forward rate or market rate prevailed at that time.
So as of now, the offering is for 5 years. In addition to it, one thing I missed in my presentation while I was giving my presentation, if someone becomes a resident uh, and he does not remain an NRI, then in that case, if he does not inform, okay, the FD would be keeping on going and would be maturing at its time. But if the KYC have been given and it has been seen that now he is no more an NRI, then in that case, the FD would be closed.
Okay. Can a professional firm registered in UAE open a branch in GIFT City? What are the pros and cons by Mr. Jotin?
Yeah. So yes, the council has also now allowed that if a partner is there uh, in India, they can open an entity and become a partner at GIFT. Similarly, he would not be considered as partner in two entities. That is, that would be kept separately, or in simple terms, he would be allowed to take advantage of becoming partner in two entities, maybe at India or at foreign jurisdiction. Similarly, the taxation would be there. He would not be put on tax the income which have been generated by the by the CA firm would be absolutely tax free for the 20 consecutive years out of 25. And he can do his global practice taking gift as a jurisdiction. He can do his BATF, so he can give his BATF services from here and many more which are there in the ancillary. So there is specifically ancillary service regulation which are there at IFSCA, which is like again very focused towards the service providers like we chartered accountants.
Okay. This is a follow-up question for the previous question that we answered from Mr. Park. So his full question was, can my fund derivatives in NSE exchange if I open fund, can my fund trade derivatives in NSE exchange if I open fund with GIFT City?
Yes, you can do that. The only point is you have to convert your dollars into INR. You have to do your derivatives there. If that derivative product is not available at the exchanges and you want to do a derivative at India, if that's the case, definitely there is no restriction. You need to just calculate your maths. If you are doing any product which is there at gift only or across the world, you might not convert the currency. If you are coming to India, then you have to convert it, and you need to check your conversion risk and hedge your risk accordingly.
Okay, thank you, sir. And one final question from Mr. Praveen Damani. Can you speak, can you speak on the extent of mutual funds, ETF investment in USD and timeline by when these will be widely available to people? What are the types of funds available and the similarities or differences between domestic and international funds, whether the full ecosystem of SIP, SWP and all are available. So relating to that.
Many of the names you have told, like I can just tell mutual fund, yes, it is available. ETF, it is available. AIF, yes, it is available. There are almost around 300 funds which are available, and the funds are like of a diversified nature. Funds which like looks forwards for investing in China, US, country specific funds are available. India specific funds are available. Tata have opened their mutual fund. So variety of products have now been there at GIFT IFSC.
Okay. Thank you. So we've covered almost all the questions, and thank you for the wonderful seminar that we had, a webinar. So I hope our members have definitely benefited from this.
Thank you
So
very much.
yeah, thank you. Let's give a big round of applause virtually. Thank you, sir. And it's now my pleasure to welcome our next speaker of the day, Ms. Neethu Ramnath, who is a Chief Manager and Head of Operations at the Bank of Baroda, UAE. An engineer turned banker, she brings over a decade of experience across digital banking, operations, and leadership roles. She began her career with TCS in BFSI sector before moving into banking with Vijaya Bank, later transitioning to Bank of Baroda. Over the years, she has held diverse roles, including branch head, product manager for UPI and ERUPI in digital banking, faculty at Baroda Academy, and operations head in Abu Dhabi. With a strong blend of technology and banking expertise, Ms. Ramnath continues to drive operational excellence and digital innovation in financial sector. Let's welcome Ms. Neethu Ramnath.
Thank you, Hemlata. I'll share my screen.
Yeah. Yes, ma'am, it's visible.
Good morning, everyone. I'm Neethu Ramnath, Chief Manager and Operation Head from Bank of Baroda, Abu Dhabi. Before I begin, let me thank the ICAI Abu Dhabi Chapter for giving a wonderful opportunity to talk to some of the finest minds in UAE. And ICAI and Bank of Baroda have been associated for more than a decade and a half, and which is still going strong. We are grateful for the partnership, and we are always happy to be a team member. And congratulations to Amit sir for a wonderful session. I hope I can meet the rigor and enthusiasm that he has given. But even if it is not, please excuse me because I'm an amateur. Are you safe? There's one question all of us in the UAE and Middle East have been listening to for the past 4 to 5 days. When the realization slowly started to hit that this is not just a 1 day, a 2 day. And we started asking, are we safe? Are families safe? Eventually, you realize that you have to come to terms with the reality. Then, like the Maslow's law of hierarchy, we moved into the next thing. Is my money safe? Is my fund safe? Is my savings safe? In the past 1 month, most of the inquiries, personal calls, messages, even personal inquiries coming to the branch, people would come and ask, would you advise, should we keep the money in UAE? Should we park it outside? Should we send it back to India? Maybe wait for things to settle down because of the geopolitical tensions? And the questions came from doctors, lawyers, chartered accountants, businessmen, other professionals. Most of the time, we all know the answers. We just need a reassurance from someone you can trust. And we will try to give an honest approach on that. And I hope I can help you navigate through the paths we provide. I'll give a quick glossary on Bank of Baroda's journey We started in 1908 in Mandvi, Baroda, from a small branch, and now we fledge across 15 countries with 183 million customers and 30 lakh crore plus business. We have 80 overseas branches, 8,648 domestic branches, and we were also awarded the Best Bank in 2025 for the Excellence, Innovation, and Sustainable Growth by the Banker. Bank of Baroda UAE started its journey in 1974. On 25th June, our Dubai branch was inaugurated by late Sheikh Rashid bin Said Al Maktoum, may peace be upon his soul, and second branch in Abu Dhabi, which began on 23rd July 1974. Today we have 5 fully fledged bank branches, 44 ATMs, and 9 EPSUs. The one thing we proudly say is that we are the only Indian bank with a fully fledged license operation in UAE. And that is the reason why we are saying why Bank of Baroda. We are the presence, probably the reliable friend from both your sides, your home in India and where you work as your home. Our presence in UAE is strong, and our network covers more than 8,600 branches. For all the NRIs who are working in UAE, we are here as a little heartline of India and UAE to coordinate with your Indian branches. We're the second largest public sector bank, and also we are licensed by CBUAE, and we are under the regulation of both RBI and Central Bank of UAE. Now, NRI and FCNR deposits can be fully repatriated, and along with that, the one super product that we can offer that nobody can offer is that easy liquidity you can get against your Indian deposits in UAE. I'll come to that later. And also the relationship-driven approach. We provide you the personal guidance, relation, and accessibility that probably the banking infrastructure or banking presence in here are generally not entertained upon. RFI, that is the Rapid Funds to India, is one thing that we have been providing since the inception. You can use your mobile banking, your net banking, as well as across the counter to send money to India. And if you're a Bank of Baroda customer in India and UAE, it is free of cost for you. The services that we provide are basically retail banking, remittance services, corporate and SME banking, and NRI banking. We provide deposits in multiple currencies, that is AED, USD, GBP, and Euro. We also provide net banking, mobile banking, debit cards. The onboarding is through digital. And coming to the major NRI account types, we have specific accounts targeting HNI customers, women customers, and people who are aspiring to be NRIs also. Master Stroke, Global Women, Aspire NRI, Premium NRI, Power Pack NRI, NRI Salary Savings Account, and somebody who is on a visit to India for 6 months. That can also be done. Now, the one thing we've been talking about is foreign currency non-resident accounts. A small trivia, FCNR, why it is FCNRB and not FCNR or FCNRA? Foreign currency non-resident deposit was started in 1975 by RBI. But when it started, the exchange risk was borne by RBI. Later in 1993, this was withdrawn, and it was decided that banks will be bearing the exchange risk, and hence foreign currency non-resident banks. Bank of Baroda offers FCNR in 5 different currencies: USD, GBP, Euro, Australian dollar, as well as Canadian dollar. The minimum amount will be 500 units in respective currencies. The tenure will be from 1 year to 5 years. The balances and interest are freely repatriable. It is exempted from income tax. You can have nomination facility also in this. Now, the Global Women, it is aimed at women professionals who work in foreign countries, and there are a lot of benefits that they get, which is related to the lifestyle benefits that they get, the complimentary hotel stays, golf partnerships, and other ATM high usage facilities in ATMs and e-coms. Bob Aspire, where somebody who is going to a foreign country for the first time, probably on a visit visa. If you don't have a non-resident account, you can open an account from India, move there. Once you get your visas, you can send it back, and then your account will be active. NRI salary savings account for somebody who is in their initial 1 or 2 years of your foreign banking or your foreign professional life. It could be used for saving. Baroda Power Pack NRI savings account. It comes with a lot of opportunities and benefits. They offer Opulence debit card, which has a lot of offers, including unlimited domestic and international launch facilities. Bob Premium account. This is also one of our premium savings account, which comes with an inbuilt insurance coverage and also complementary benefits like local rent, concession on 100%. Your loans will have concessions on processing charges. Now I'm moving into the main point of this entire presentation. Before that, let me talk about something called as resident but not ordinarily resident. We all know that there are two categories, resident and then a non-resident. Once you move into another country and you stay there for more than 182 days, you're certified as a non-resident. Now, what happens if you take a break? What happens if you come back and you're not a resident anymore? So there is a transitional tax category called as resident, not ordinarily resident. As per the income tax rules, they say that if somebody has stayed outside of India for 9 out of the 10 preceding years before they have come back to India, they can be considered as RNOR. Or if you have stayed for a total of 729 days or lesser during the last 7 years preceding the financial year, you can be an RNOR. This gives you tax benefits up to 3 years. Now, how can this benefits be used? I'll be speaking in the next few slides. There is a rupee-linked foreign currency deposit. Now, the foreign currency deposit, what happens to the foreign currency deposit once it matures? You can repatriate the foreign currency back to the country where it originated from. Or there is an option that you can enter into a forward contract, and in that, a predetermined rate will be fixed according to the tenor. And at the end of the tenor, on the date of maturity, the amount will be converted into INR and will be credited to your non-resident account. It's kind of a hedging, and we are providing this option for 12 months, 24 months, and 36 months. The next thing is resident foreign currency account. Now, this is an important section which we don't often talk about. In case you are somebody who are going to get superannuated very soon, or somebody who has decided to go back to India, in that case, what happens to the funds if you want to maintain them in the foreign currency? Now, you've received your superannuation in dollars or in AED or any other currency. In that case, what can you do? Or imagine you've taken an insurance in your foreign currency and the proceeds have come, and you don't want to settle it in INR. So this is an option that you can use where you can maintain your currency in the foreign currency deposit in USD, GBP, Euro, Australian dollar, or Canadian dollar. The funds can be maintained for a tenure of 12 months or more than 12 months, depending on the scheme. Now, when you return back, you have your FCNR deposit. Probably it could be for 1 year, 3 years, 5 years. Now, imagine you've returned back and the maturity has come. But no, you don't want to convert it into INR. In that case, what you can do is you can open an RFC account. You can maintain the foreign currency deposit without any loss of interest or penalty. This is applicable to both your NRI deposits as well as your FCNR deposits. Now, what happens if you want to again become an NRI? In that case, the same RFC funds can be converted back to NRI deposits or FCNR deposit as per your requirement. Similar to NRI deposits, for the premature closure, there will be penalty interest of 1% applicable, and it should have been there for a minimum of 12 months. There is something called as a special non-resident rupee account also. This was recently introduced by RBI, where non-residents who wants to invest in Indian businesses can open the account. It's a non-interest bearing current account, and the transactions are quite monitored, and the remittances, you might have to use the A2 form as well. The amount is fully repatriable, but overdraft facilities are not permitted. It is majorly used in rupee denominated external commercial borrowings, infrastructure, and other professional services that you avail, as well as foreign portfolio investments. Now, if you want to open an NRI account with us, you can visit the domestic branch in India as well as in UAE. We can open your accounts from here. We also have presence in other countries. You can visit there as well. Now, what happens if you don't have a Bank of Baroda office and you want to open an NRI account? In that case, you can take your account opening forms, get it attested, and send it back. There is an online option available where you can register your interest in opening an account. They'll give you a detail. You will have to fill the formats, submit it, ask for a face-to-face or non-face-to-face interview onboarding. If it is face-to-face, then you can visit the branch in domestic or overseas, submit the documents, get it verified, and then your account will be opened. If it is not the case, you can take the attestation from the respective embassy, high commission, consulate, and then send it to the respective branch, get it opened. Once your account is activated, you will be receiving an email. The valid NRI documents for opening an account: your passport, your visa, work permit, your foreign address proof, FATCA declaration, CKYC form and CKYC consent, FEMA declaration, as well as PAN card if available, or Form 60. If you're a PIO or OCI, then either you should have your OCI card or PIO card, or the relevant pages from your parents or your grandparents, which states that they are of Indian origin, or if you're a spouse, copy of your marriage certificate. That's the only difference between NRIs and PIOs. Regarding repatriation, if it is from a non-resident account, it is fully repatriable. Now, what happens if it is from an NRO account? There is a limitation on the repatriability. In this case, if you have done a sale on a property and the proceeds have come, now the sale of a property proceeds will always go to your NRO account, and now you want to repatriate it back. In that case, if the amount is up to 5 lakh, you can give a self-declaration, which is Form 15CA. If it is more than 5 lakhs, you need a certificate from your chartered accountant, which is the Form 15CB. So these are the two certificates that we generally use for investments. There is something called as a double taxation avoidance agreement also, that India has made an agreement with almost 100 countries, which includes UAE also, that if you are a resident in a foreign country and you pay taxes over there, then you're not supposed to pay tax in India. If you have paid your taxes, then you have to keep a tax residency certificate. And if it does not mention your foreign address or certain other details like your nationality or your tax identification number, probably you will also have to fill a Form 10F through your ITR e-filing portal. You also have to give a self-declaration stating that you are a resident of the double taxation avoidance agreement country and your passport and visa to ensure that you are an NRI. Also, you can claim your foreign tax credit using your Form 67 if you are a resident of India and you have paid tax in a foreign country. This is the current interest rates that we are providing, up to 3 crore. A special scheme has been launched, which is Bob Square Drive deposit, which gives you an interest of 6.45 for up to 444 days. The domestic NRI deposits from 3 crores to 10 crores. Foreign currency deposits, this is the latest. For 1 year is the maximum that we are providing for USD. It is 5%. Now the super product that we were talking about. You can keep your NRI deposits and FCNRs, like everybody said, you have ample options. There are multiple banks that are providing NRI deposits as well as FCNR deposits. Now, what can Bank of Baroda UAE give you that other banks can't? You can keep your FCNR deposits in India. You can keep your NRI deposits in India. But imagine if your company is under liquidity crunch, or you are in need of a personal favor. In that case, your funds are parked, but you can't avail it. So in that case, if you're an individual or a company, you can approach us and we can give you almost 90% of the deposit value. If it's a FCNR deposit, 75% of the deposit if it's a non-resident deposit. And if it's in local deposit, the interest rate for up to 200,000 would be the FD rate plus 2%. If it is more than 200,000, it is FD rate plus 1%, 1.5%. In FCNR, it will be SOFR, 3-month SOFR rate plus 1% or FCNR rate, whichever is higher. And for NRI deposits, it will be 3 months IBOR plus 0.75 with a minimum of 2.5%. Thank you. If there are any questions, I'd like to take.
Thank you, Neethu ma'am, for the excellent session on this NRI banking.
Thank you.
Let's see for the questions. Whether interest in RLFCD is taxable once the person becomes a resident in India, by Mr. Krishna.
If you have invested in the RLFCD and it is almost up to 3 years, you will still be an RNOR. So it won't be taxable.
For how many years, Neethu ma'am?
Up to 3 years.
Up to 3 years. Okay. Then in the last slide, you are talking about when you're taking a deposit, when you're placing a deposit, then you can get a loan with EBAR plus 0.75. Okay,
Yes.
but if BOB is providing an interest of 5%, and if I can take a loan with the EBAR is close to 3.5 or 3.6 plus 0.55, at least we can make a profit of 0.75 also on that by taking a loan.
Yeah. But then you can deposit with the local deposit also. If it's a short-term liquidity, you can keep it with us and avail against it also.
Just in the last 6 months, if you look at the EBAR rate, more or less the EBAR rate is in the range of 3.5 to 3.6. So if I'm adding another 0.75%, then it comes to 4.35. So if I do the arbitrage, I will get 0.5%.
Correct.
Okay, fine. Thank you.
Thank you.
The next question is, the account opened in UAE Bank of Baroda, is it regulated by the UAE Central Bank or the RBI? And what about the nomination rules when you open an account here?
Okay, so the accounts opened, since we are an Indian bank.
This meeting is being recorded.
Hello?
Hello?
Yeah.
Hello? Hello?
Am I audible?
Yeah, Mr.
Yes,
But there's an echo going on.
Can you try now?
Okay, so the accounts opened, since we are an Indian bank and we are a foreign branch, we're regulated by both, like I said in the initial slides, we are regulated by both RBI as well as Central Bank of UAE. But for nomination, in Central Bank, it is as per court order. In India, we have a very defined rule on nominations. But in here, even if we take a nomination, it's not valid unless you get the court order. So the nomination will follow the central bank rule, but all other regulations, we'll have to follow both of them.
Yes, ma'am. I think if any more questions are there, then we will take it up and we will connect with you later. So thank you so much for enriching us with the knowledge and the various products that are available.
Thank you. I think Vivek Kumar has asked one question about up to what amount deposit are secured.
Yeah,
See, in India, the deposits are covered under DIC GC. So up to 5 lakhs, it will be saved. And since Amit sir spoke about IFSC also, we also have a presence in IFSC. So the option is available in IFSC also.
Ma'am, this presentation slides would be made available. Is it okay for us to circulate to members?
Yes, I've shared it with Hemlata.
Thank you.
Thank you so much.
Thank you. I call our treasurer for his vote of thanks. Shafiq?
Yes, thanks, Hema. I hope you're not able to see me. I'm not able to see myself in the screen. I'm sorry. Hello, everyone. Good morning. First of all, thanks to our PDC team for organizing this wonderful session. Also, all the IT support from Rajesh and the wonderful speakers for the today. Great sessions, and all our participants for joining us today. I know it's a weekend, and probably the topics and the sessions we are organizing is so much value to you. So thank for your participation, and also to our sponsors for the genuine and great support you have always extended to us. Thanks to everyone, and I hope you all are safe. And also wanted to please thanks to this country, UAE, for protecting us and helping us to have I would say, a peaceful stay here. And thanks to everyone.
Thank you so much.
Thank you, everyone. Thank you, Amit ji. Thank you, Neethu ma'am.
Thank you, everyone.